Okay, well, welcome everybody, and thanks for joining me today. And thank you very much for inviting me back. It's a really interesting topic to do of, what is your favorite indicator? And for me, price really is my favorite indicator, but can we make that a little bit better? Well, I think so, and that's what I'm going to show you today. And I'm Leslie Jouflas. I've been teaching and trading the markets for over 20 years. My website is tradinglivеonline.com. And I started that in 2007 for the sole purpose of helping to educate traders. I'll be honest, I'm the first one to admit that trading is not always easy, and learning trading is a lot of steps forward, steps back, but you've got to find something that really resonates with you and then stick with it so you know it forwards and backwards. I have a couple books out there right here: Trade What You See, How to Profit from Pattern Recognition, and Essentials of Trading. It's not what you think, it's how you think. And usually 2 or 3 times a month, you can find me on the stockcharts.com YouTube channel on your daily five. We have 10 minutes to present 5 charts. So again, I do that a couple of times a month with them, and then other presentations such as this. Here's where you can contact me. Here's my email and here's my website. Okay, with that, let's get right into it. I'm going to show you today some out of the box methods using the relative strength indicator. Now, there's a book there. We'll just zip kind of past these. We don't want to take time on that. But I use pattern recognition. And what is pattern recognition? It's trade setups. It's learning to recognize repetitive movements, shapes in the markets that you can quantify and then build a solid trading plan around. I am a CMT. I have my designation for that. And when I was studying for those exams, one of the books that we were required to read, some of the material, was Constant Brown's book, Technical Analysis for the Trading Professional. And up to that point, I really didn't use any indicators on my charts. But in this book, it really caught my attention, her method of using the RSI. So what I'm going to show you is not my own original work. This goes back, Wells Wilder was the original developer of the relative strength index, and unfortunately he passed away this last April. He was really such a huge contributor to technical analysis, and his work will live on in technical analysis. But the RSI is one of the things that he did contribute. So this is what we're going to look at today. And the RSI, when traders usually start in the markets, they use it as an oscillator. It's a bounded oscillator from 0 to 100, and they learn oversold and overbought. Well, there are other ways that you can use this indicator. And I'm also going to show you why that overbought and oversold just really does not work sometimes. You may have had that experience and find that you just totally get mowed over trying to trade that way. But the RSI can also be used with divergences. Divergences was called failure swings, centerline crossovers, and in general identifying the trend. But today we're going to look at a technique with the RSI where we can identify ranges that are bullish or bearish, and more importantly, the transition from bull ranges to bear ranges. Now, if you really like this, of course, Constant Brown's book is excellent for this. And I have some things on my website where I combine the pattern recognition that I use. I'm also going to, you all should have gotten a PDF download of an article I wrote on the ABCD pattern. And so I'm going to show you some slides today that combine this method of the relative strength indicator with this staple pattern that I use. Okay, so let's kind of move along to some charts now. The parameter, oh, real quick, the parameter of the RSI generally is considered overbought above 70, oversold below 30. Now, one thing that's important with ranges like this is whatever markets or securities that you trade, you've got to find out in the market and time frame what those overbought and oversold areas are. It might be a little bit below 70, might be above, and same with the oversold levels. But that's pretty easy to do by just doing some observations in those markets. But it does give you a baseline to work with. Okay, so let's walk through this chart. This is a chart of GBTC, and this sort of follows the Bitcoin market. If you remember this last spring into early summer, the bullishness in Bitcoin was about as high as I've ever seen it in any market. You just heard about it everywhere. I mean, even the local news, which I'd never heard them cover Bitcoin before, was starting to cover Bitcoin. You'd hear it on all these different social media platforms, and they were talking about how it was, kind of right back here when it was making this high up here, talking about how much higher Bitcoin is going to go, and that Elon Musk bought Bitcoin and he thinks it's going higher. Well, I think Elon Musk is really not going to tell you publicly what he's doing with anything that he holds as an investment like that. So I would just take that with a grain of salt. So anyway, that's something to keep in mind. When I hear about a market over and over and over that's extremely bullish or bearish, I start to really take a look at the chart for some turning points. And that's what happened on this chart. And we're going to walk through it and take a look of it. So we're going to look at some classic divergences as well, and then the concept of the change of trend with the RSI. So you want to start looking for ranges of support and resistance, and that's a good place to start looking. Now, bullish ranges on the RSI are generally around on the low side, the 40-ish area. And I say 40-ish because it might be a little bit lower, might be a little bit higher, to around the 50-ish area. The upside bullish range, same thing, about 70-ish, maybe 80-ish. So again, you've got to study the market that you trade to find out where it is. I trade the S&P 500 quite a bit, and that bullish range usually falls a little bit below that 40 level. So make sure you go in and take a look at that. So I find it helpful to mark these ranges in once I see them with the horizontal lines. Identifying the ranges will help you identify when that market shifts from the bull to the bear and back to bear to bull. And these are fractals. So you'll find this process happening any time frame, any market. So if we start back in September, October 20th, right around back here, the RSI holds the support on a decline. So we can see this decline coming down here where I've got this pink dash line, this pink dash line. And we can see up here, there was a high made here, a lower high, a bearish divergence in the RSI, and it continues down towards the low end of that oscillation. Well, notice here how it starts to form a range. Now, these are important because these ranges are what are going to help you identify when they start to come out of a bearish range into a bullish range and vice versa. Hang on just a sec. I just need to click something on my end here. So it's really the same concept as what was once support is now resistance, or as Steve Nissen says, change of polarity. Now, Constance Brown states in her book, when the market's trend is about to reverse, so too will the oscillator ranges. So this is a really important concept to keep in mind as you study this. So usually we see here that the price, by the way, there's a B, C, D pattern here, and I'm going to show you that really quickly so you know as we go along what that looks like. So here's a buy pattern that I would be identifying down here. So right here, we see this range. We can see that, first of all, there is a little bit of bullish divergence forms here. And then the RSI starts to come up out of that range. It's a bit of a gap up on the price chart. There's just the slightest of tests back down. Many times you'll see a test back down. That first turn will come right back to where that little breakout was. But this was pretty strong. It just barely budged that RSI. This is telling you right here that there's the potential for a change from the bear to the bull. Here we also can use trend lines on this. You know, there's a trend line broken to the upside here, but this is a pretty strong signal. Now here, as the RSI again on this little pullback right here, the RSI pulls back with it, but this is now holding uh, around the 55 level. That's bullish. And now as the market continues up, it gets into what a lot of traders would consider the oversold. Now, this is where you can really get in a lot of trouble with that, because if you can recognize early that there's strength and potentially a new trend starting, then you don't want to treat this as an oversold signal. You want to treat this as a sign of strength. And of course, trends like this are always easier seen in hindsight, but you can learn to recognize the potential for it using a technique such as this. So now, oops, oh, wrong chart. Hang on, let me go back. I was trying to remove my. Hey, David, I've got the little Zoom little icon thing on the bottom. I'm trying to move it out off my screen. If there's not a way to do it, that's okay. Okay, well, we'll just go on. So notice here, notice how the RSI as the price, even on the pullbacks, the RSI is just having very small pullbacks. Look at how much strength there is. This is a trending type of environment here. Now, here's where the RSI, if we move over, here's where the RSI starts to form a support. Now, this support, if we take a look back to where that previous bear range was it was starting to change from bearish to bullish. That's retesting just about where those highs are. And that I found in my observations with it that that's pretty normal. Again, it's like what was once support is now resistance. What was once resistance is now support. So you can start to, even as early as here, you can start to put a horizontal trend line in and project it out underneath this level. And this is how I do this on my charts. And so as the RSI now, which you pull back, you know, oscillates back up again, oversold is not necessarily oversold because the market's in a very strong trend here. So as the market continues up, you can see again, it comes back down. This is a very bullish zone. This is got it in about 43 to 45, this low end of the range of this. So this is telling you that the market is still in a bullish mode. Now here, as this comes down, this looks like, you know, pretty good size correction here. There's also A, B, C, D buy patterns in here. The RSI is retesting those lows and holding it. So there's nothing here saying that there's anything particularly wrong with this uptrend, the correction in the uptrend. So as the price continues up, it comes up, makes another high here, and here's where the excessive bullishness, everywhere is really starting to become apparent, then RSI comes down. So here's again a normal test. Market comes down here. Now, here is where it starts to change again. You can see here I've marked in where this smaller range has formed. Now, this I find occurs frequently, finding sort of a range within a range. It's sort of the same thing with coils within coils, triangles, big ranges on price charts, etc. So here is where the RSI starts to form a smaller range, starts to get a bit of a lower low, but still in the bullish range, and then back up. So you can easily draw another trend line across here. Now here is where you can start looking for particular types, of patterns. Are there patterns on the chart? If you're saying this is now starting to show some potential weakness here. Well, here there was a big symmetrical triangle. There were A, B, C, D cell patterns in here. Here's just kind of a trend line over here. But this is where it really starts to break. And so I've drawn the pink dashed line up to show where this corresponding break of the bullish range of the RSI breaks the support. And now the trend is changing from a bullish range to a bearish range. So now we've got a lower low in the RSI, and notice how the RSI is now only coming back up to was the support, and now it's the resistance area. So this is confirming here that this is now in a bearish mode. I don't know if you guys remember, I'm sure a lot of you do, but this was still extremely bullish over here. There's so many people just still thinking it's going to the moon, which, it looked like it almost got there actually. Okay, so let's move on now to the next chart, but notice how it just stays in that range. So now it's formed another range. So now the next step is, if you're continuing to be on the short side of that market, and then watch for the signs of it to change back to the bullish range. Now I'm going to do just the short tutorial on this ABCD pattern so we can get into some more charts that have that pattern, and then I'll show you some examples with that as well. So the AB equals CD pattern, and you have your PDF. So that's much more in depth than what I can do today. But basically, a lightning bolt shape. On the left side is a buy pattern, right side is a sell pattern. There's three waves to the pattern: the AB leg, and then a retracement, BC leg, and then the final leg, the CD leg. Now, this pattern is also a root pattern of other strong trading setup patterns: the Gartley, the butterfly, the three drive. And these are harmonic, repetitive type swings. They occur frequently in all markets and time frames. Now, this is the Fibonacci ladder that I use with the pattern. So the BC leg is the retracement. These are the fib retracements that I generally look for with it. These extensions up here, the AB, the CD, equal, but not all the time. There is a good percentage of time where this CD leg will be an extension and go further, either to the 127, frequently to the 1618 and 127. And that's simply found by taking the length of AB, you multiply that length by the 127 or 1618, add it to the low, and that will project it up, or subtract it from the C if it's a buy pattern. I have Ensign software. It's a great software for these patterns, and this draws all of this out for me. So I know all of these areas in advance. But generally, I use the 382 as a minimum retracement. The 886 is what I call the last chance fib retracement. Usually when the market gets up to the 886, if it does not turn from there, it hovers and has a close above. It majority of time will get to the 1.0, the high, and many times continue in that direction. So that's why I call it the last chance fib ratio. So here's some examples of the correct way to label the ABCD pattern. So really one of the only rules, or a couple of the rules for this, is the C must be below A for a buy pattern and above A for a sell pattern. And the D point must extend beyond B in order to be a valid AB equals CD. So there's the rules, and you can study those with your PDF that you have a little bit later. But let's just look for this lightning bolt shape for the rest of our charts today. Here's an example just showing you the repetitiveness of these types of lightning bolt swings with some Fibonacci ratios. So again, I just wanted to leave this slide in here for you. You guys can study this a little bit later as well with just a few more details about the pattern. So now let's get back to our RSI on the charts. Oh, I forgot okay, now we're back. Okay, so this is a chart here of the S&P 500. This is the intraday 15-minute chart. We just had a large move to the downside the last couple of days. Yesterday had a turnaround, and today has been a strong move to the upside. So let's walk through here. So on the left, the RSI holds the support as the price makes a new low. So we're over here. So see this low coming down right here. And by the way, there's what's called a little butterfly pattern in there to ABC with the D extension there. So it holds the support and it makes a bullish divergence. And then it oscillates, it comes above this resistance here and starts to trend up to the upper side of the range. Well, here's that 40-ish level here. So we can watch this as the price does this consolidation, the RSI travels back down to the lower end of the range. And you can see this little area here, resistance, where it's just about where that was. And again, it comes up. So I've marked in here, this was where one of the high points of the range I kept repeating was. So I marked that in. And then the extreme highs, I marked that in as well. So again, each of these yellow circles has a little ABCD buy pattern. So I can combine the pattern recognition I use with this method of recognizing the markets in a particular um, condition, such as a trending versus a ranging. It's changed from bullish to bearish, bearish to bullish, and so on. So in early July, over here, we can see a break of the support, and we can see the price come down. And notice where the RSI moves back to the resistance area. So we have this big drop here. It moves back to resistance, just about where that break was. So again, it's confirming that this is a line I want to keep on my chart for right now. And another breakdown, then back up to around the 75, down and up. Now here's where a clear range starts to form, because in here we don't really have an extreme clear range. There's kind of a small range in here, but we're still down in this bullish. It's still in a bullish mode. So I wouldn't pay a huge amount of attention to that. But here we start to see this range as the S&P 500 is making new highs again a few days ago. So that's up around the 75 level, and it starts to make this range, and we can start to see some price divergences with that. And then we can see the break of the range. And as the price comes up right here, again, it tries to make another new high. You can see that shortly after we get a break a definite break of this support. And now we're broken the 40. There's a sign right there. This whole break here, retest down, and now we've changed the ranges from the bullish to the bearish on this short time frame. Now usually momentum will start on the lower time frames first and work its way out to longer time frames. So this is a 15-minute chart, so it's a good policy to combine your time frames to see if some of your other longer intraday time frames are also showing these same types of signs. You might even want to go down to the lower ones and see, where they started, to break and change those ranges. When we were up here at these highs, different time frames had a lot of different sell patterns that were forming and were completing. The Nasdaq, the triple Qs, the S&P 500 on a couple of other time frames also had ABCD sells. I had presented on some of the stock charts, the daily five, the triple Q patterns, the cell patterns, butterfly patterns that were forming, and those were on daily charts. So those were longer term time frames, and sometimes those take a little bit longer, of course, to play out. But we're going to look at the triple Qs as well. So yesterday, you can see here down at these lows. So the market has this break. You can see the RSI barely, really coming up. We're in a very bearish range. That's a bearish test up there with the RSI, and then an extreme break to lows, very, very oversold on this. And we can see the consolidation here. Well, the price level that the S&P came to yesterday was coming back to a previous area of consolidation that the market spent quite a bit of time testing before it had an upside breakout and started making new highs. So it held support down here, I think 14 on the futures, 1420, 42.24 was the low. So this is now going to be an important support area to keep an eye on. And here is a B, C, D buy pattern in that area. Here, the oscillator did not form a range, but extreme oversold. You can see right here the divergences in the RSI as it was down at those low prices, and the RSI was starting to climb back up there. But this is an important support area to watch. On these other lines on this chart of mine, I've had these on here for a very long time. I tend to keep them on my charts so that when I pull the chart up, I'm like, oh yeah, okay, that's that area. And I can look very quickly and see, what is lining up with what. Okay, so let's move on now. So here's the example of the triple Q daily chart, and these were the patterns that were forming. Um, Again, daily chart, these are larger patterns. And if we look at the start over here on the left, we can see here I put in the RSI when it came from, this was back in March 2020 with the severe decline. It formed a triangle pattern. And on the RSI, you will see classic technical analysis patterns such as triangles, head and shoulders patterns. There's even techniques that you can use, Fibonacci retracements and extensions, but I actually don't use those too often. I just look for the patterns. So here on the cues, here was a signal here with this pattern, and you can see the higher lows on the RSI before a breakout of that triangle pattern on RSI, and the market had a trend to the upside. I hope you can see where the bullish range started. So here's the lows. If we were to draw a trend line across, if we took this trend line and even put it backwards, we can see it. I just want to leave that blank so you can sort of use your eyes and go, oh, okay, there it is. I see it now. So here it remained in this bullish range here. And then right here at this high, we see, a bit of a low come down from there. Um, and a retracement pattern here. So it's just sort of consolidating in this area and then starts to form this other range. So you want to wait for the most clearly defined ranges when you're using this method. And some are going to be obviously like this is a very clear one over here. This one's clearly defined here. Over here on the right, we don't have a new one yet. So the intraday charts do, but not out on the daily charts yet. So that will take some time to form on the daily charts. So as the market, this is what's called, this here was a A, B, C, D butterfly sell, got a correction to the downside. Here's an inverse head and shoulder pattern, left shoulder, head, right shoulder, as the market formed an A, B, C, D buy pattern. Here's the little resistance area, only little pullback, and then above that, and the prices continued to climb to new highs. However, there were larger sell patterns forming on this. And we can see here the RSI made a high just about here. But then on the last highs, there's divergence that started to form. So let's go down let's go down to a 15-minute chart of the cues and see what that looks like. So we can see a lot more detail here of the last couple of days than we could see on the daily chart. So here's where the high area was on the daily chart. And so you can see on this move here to the upside, the D is where the ABCD from the daily chart, the sell pattern, this is right where it was completing right in this area. So here we can see it's still holding on these pullbacks. This is still a bullish area here. RSI oscillates up to the higher end of the range. But here, this I believe is giving a warning just coming down on this move here, breaking this support. And then look at this test right here. This was the first indication that this was turning bearish. So I've got these arrows lined up with where that was on the price. So this is here's a little also head and shoulder pattern, left head, right shoulder. Constance Brown points this out in her book that you can find these classic technical analysis patterns in the RSI. But this is the first indication. That's a very early indication. And combined with pattern recognition, like ABCD patterns, where you have a completion point, you're at new all-time highs, so you might not want to just jump right in there. But something like this can certainly be a huge tool for traders to be able to, give them a signal, especially if they're looking for a particular direction, to be able to enter into trade setups and have the smallest amount of risk. And that's one of the things I like about the ABCD patterns. You can find where those completion areas are well in advance. You can monitor those completion areas and you can control the risk. So here, this is, where that was signaling. So you get a move down here. Now on um, one of the presentations I did, I also said one of the techniques is watching, gap areas if they hold or not. Well, here was a, gap to the upside trying to get to new highs. And if that failed, I said that would, be a signal to the short side. So you can see here the price came down and just a small retracement. And then from here, the market failed. So if you look at the psychology of the market of that, you have, you have traders that were buying this for new highs, and then suddenly the price reverses. So you have all the buying that's in this area here, they're now underwater, and some fear starts to set in. So I hope this is a chart that you can, maybe use and study for yourself, and kind of go to the charts that you use and see if you can replicate something like this. So we can see the RSI now, it was weak here. It was very weak because it wasn't able to get back up, to the range. And then here it's really showing weakness. And now we break support down below this. And as the market is coming down, the RSI just doesn't have very much, oomph to it at all. And then again, here on this little correction, this is, this would be a sell opportunity here because the RSI is only coming back up and retesting these areas. It's not likely to get on a day like that, it's not likely to get above this area here, just to be doing some testing with it. And then again, like the S&P, we can see that the RSI yesterday got to an extreme oversold, and then has been, having a move to the upside. Now, where the markets go from here, I think we're going to form sort of a large range for a little bit, and then we'll see a breakout, uh, a strong breakout in one direction or the other. But with this, when you have moves that are extreme downs followed by extreme ups, many times you're starting to form a large range. Is the market's like trying to decide, do I want to try for new highs? Uh-oh, is it time to sell off? So I think it'll be a little bit of a battle going on for a bit, which makes for really good trading opportunities. Okay, so here's another example. This is the symbol NEM. This is related to the gold market, of course. And this is an example with a daily ABCD buy pattern. This was from last March. Now the RSI was down when this pattern ABCD, then there's also a little 127 extension pattern with that. I put where that completed, I drew this vertical line down so we could see what the RSI was doing. So the RSI had actually been holding these lows around the 30 area. But as this completed the pattern and started to turn to the upside, the RSI was starting to show early signs of bullishness with that and making bullish divergence. And the RSI made a slightly higher peak. But look at the range that then formed as the price started to test this trend line to see if it could break above that trend line. This was a bullish signal from forming the range higher that this was likely to get through the trend line. And then here it breaks the trend line, has a test of the trend line, and the RSI is holding in a bullish position. As the price moved to the upside, had a nice move to the upside, then the signs of trouble came in, started to see up here bearish divergences, and then you can see the RSI just totally break that support. So that was definitely, if the gap down and the long bars didn't do it, this is definitely a sign that there was a lot of trouble. Okay, our next chart, Apple. Let me take a sip of water real quick. So Apple, I do a weekly market setups video. It comes out every weekend. We do analysis with these types of patterns, and I use the RSI quite a bit with these patterns for the weekly market setups. But the Apple formed this big butterfly. This is a sell pattern, and a butterfly pattern is when you have an extended A, B, C, D leg that goes above where the last swing was. So here's the last swing, comes down, forms the A, the B, the C, and the C D leg really extends up there. So we can see the range. The range here was about 73-ish on the high. And here a little bit, I'm sorry, I got that covered up. It is a little bit of a bearish divergence, a lower high on the RSI on this. And then as the price turns, this is a very weak looking RSI on this little retracement to the upside, and the price rolls over and it breaks this support area here. Now, as the price moves along, it forms um, more patterns up here, and notice how the RSI down here starts to form another smaller range. There's an ABCD buy pattern in here, and we break the resistance of this range to the upside, and it has a nice move of retracement from this high to low to high. Nice retracement on that now forms a sell pattern, and we can see that as the sell pattern, the price starts to roll down, the RSI had already been making all of these bearish divergences. And then another range forms. So this had formed, several really good ranges that were helpful with the pattern identification. And then as the market moved to the upside, you can see the RSI changed from the bearish back to the bullish and then up. Now, Apple currently has this large A, B, C, D, kind of a butterfly because that's extending above this last high here. And we don't have the range yet on the daily, but the intraday charts are probably showing a change from the bullish to the bearish. And so if you want to challenge yourself, maybe look up a 15-minute or a 60-minute chart of Apple and see if you can find the bullish to bearish change of range. I bet it's there. So, but Apple yesterday had the gap to the downside, and I actually haven't checked it today, but my guess is it's only getting a retracement back up. Now, here's another example with GE, and this is going back to I think a year ago. I'm so sorry, I didn't get the timeline on this, but um, here we have. Let's follow the RSI on here, and so here, okay, must be the March 2020 lows. So we have an ABCD buy pattern here, gets a little bit of a move up and then a little extension to the downside, which is also forming what we call the butterfly pattern because the CD extended below this level here. And we can see with that, we can see this range. This range had been forming higher than this previous RSI lows here. So that's a bullish indication as well. And as the price moved to the upside, the RSI climbed out of that range and it changes from bearish to bullish. So here in this consolidation area right here, the RSI is consolidating with the price, and it's doing a pretty good job of when it gets to lows here, we have a little bit higher low on the RSI. And right here in this area right here, you can see the RSI is holding well above these lows. There's an early clue that an upside breakout may be coming. And then once the price breaks the high, it comes back, it retests there and climbs up. You can see the price starting to climb out of that consolidation. So there's a good example where as the price is consolidating, the RSI is consolidating with it, and you can use that for early signs. And the earlier you can find entries into the markets, securities that have a potential for a trend, the lower risk and the higher profit potential there's going to be for it. So I think it'd be well worth your time. I hope you think so to be studying this. So now GE, poor GE, it just can't seem to get out of its own way. So it has a nice move up here, could not quite get through these highs, tried to get through those highs. You can see here, here's an example. Here's a little range right over here. As this price was consolidating here, you can see the RSI consolidating. It broke to the upside, looked like it was going to go, but it fell back down. So we don't always get this. So you want to always make sure that you're managing the risk in your trades. But I, believe that this helps you to manage the risk because again, if you're getting earlier entries, there's like, for instance, in here, well, here is this would have been a good entry over here, but here was another ABCD buy, ABCD buy here, ABCD buy right here. So this is a pretty low risk point. Over here is a low risk point. There's a little gap here to the upside. Here's another gap to the upside. So really low risk entry um, places for your trades. Okay, Amazon. So Amazon, here we go. You can maybe start to see now. Here's an ABCD buy pattern. Here's our change where the RSI is starting to come into a bullish range as the market starts to trend to the upside. I just have some other ABCDs marked in here. It's been in a range and then it pops up with this move to the upside, but this is a bearish pattern on Amazon. I'm seeing a lot of these patterns on a lot of the big names. So A, B, C, D sell pattern. It started to come down before the market decline we've seen the last couple of days. So this, I wouldn't expect much more than a retracement to the upside on Amazon. And for Forex traders, currency traders, here's an example of bull range to bear range. There's a butterfly sell pattern with a retracement and a triangle. So that's right here in this area. So here's the bear to bull, right down here, an ABCD buy pattern up to the bullish range. This is a really nice, clearly defined range. But look what happens over here. This is where the ABCD. This is a fib extension from this high to low and up. Look what happens here as the price starts to do retracements. This RSI is really weakening. We can see here, it's almost like a descending triangle. And then where the pink dash line is showing where the break of the RSI is right about here on this bar, just about is that triangle here and here would be breaking. And then now we've got a retracement back to the upside with an ABCD sell pattern. Here's the high of that range, which is still lower than these highs here. So I hope, I'd like to thank you for joining me today, and I hope you enjoyed the material. 55 minutes is always a challenge to get something that has so much depth to it. It took me a while, you know, a lot of studying charts to be able to really see and grasp this concept. And now I can easily see these range changes. So if you struggled with it a little bit, don't worry about that. Just go to your charts and start looking for what I've showed you today, and you'll get the recording, and hopefully that will help you in the PDF with the ABCD pattern. But if you do like this type of pattern recognition with this, I have an introductory course. I put this together. It's a 3.5 hour course that covers the patterns because you've got to have a solid foundation in what you trade, what your setups are. I use, as I showed you, ABCD type patterns and a few other classic patterns. And you can learn everything about the structure with that. It's very in depth with this. And you also get a copy of the PDF book, Essentials of Trading. It's not what you think, it's how you think. Again, here's my email with this, and I'm also going to include a month free to the weekly market setups. That's the video that I send out on weekends that gives my analysis of the indexes and other markets that look like they have potential setups happening. And if you like the RSI and you go through this and you really like it, then you might want to consider. I also have a self study course that is more in depth as well. And that was from a online seminar that was recorded. It was 3 day seminar. And the first day, I go through a lot of material on what you need to be successful as a trader. And I always tell traders that, you've got to be in the education part for the long haul. You're not going to find a quick, easy way to it. You have to first find what really resonates with you and then stick with it. It's just all too easy to fly from here to there and everywhere. And a lot of times you're throwing the baby out with the bathwater because you really don't understand how to put together a system for yourself. But it starts with understanding what it is you are trading. With something like an RSI indicator, I've always said the patterns that I teach, you can use them without indicators at all. Um, I've always said with an indicator, if you add an indicator onto your chart, you have to have studied that indicator to the point where you know that it's doing one of two things. It is either reducing your losses or it's increasing your profits. So you understand that indicator and how it is helping you in those two ways. If you can't define that, then that indicator probably can be removed from your chart and it's not going to hurt you at all. I think most traders probably have maybe too many indicators on their chart, especially to start. And if you start with an indicator such as the RSI, start with the default settings. Just use those. You don't need to go in yet and try and tweak them to find any kind of magic setting for it. Start with the default until you really understand what it's doing with the price on your charts. And I think starting with it, understanding that it oscillates from 0 up to 100, that's the bounded range. But overbought, as we looked at early on one of the slides, does not necessarily mean that it's time to sell it. That can be a sign of strength, especially if you see a strong signal of a change from a bear range to a bull range. I hope that one thing helps you out and maybe keeps you out of trouble. But the in the 3 day self-study course, day two goes extensively through patterns and examples, and I've got my live charts that recorded a lot of things on there. Day three, we talk about trend day trading, support and resistance methods, trade management strategies, and a lot of examples. And then day four is a bonus day where I follow up with question and answers, and it includes also recordings that I did called my live trade series. And I took a year where I literally waited for particular types of market conditions to show you how these patterns unfold in real time, because it's really easy to look at something in a book and see a completed pattern. But when you get onto your charts, sometimes there's a gap there. So I tried to close that gap and waited and showed you, oh, this looks like an ABCD buy pattern forming. I'll show you how it unfolds, show you what I'm looking for, how I managed it, etc. So I've got a new website coming soon as well. And with that self-study course, I'm not going to be putting the Trend Day seminar in with that any longer. It's going to be separate. So it's probably going to be the new website. I hope should be up. It's been quite a project, but I hope it should be up in the next couple of weeks. So if you want that Trend Day seminar with it, then now would be the time to get it. So that is it for me today. And I'd like to thank everybody for coming. And once again, feel free to email me if you like. Any questions or comments, I'm always happy to hear from people. So have a great day, everybody.